moved from a rules-based global world order to a rulers-based global world order. Countries have been getting pressured. Look, either you get tariffs or strengthen your currency. So, but countries want the opposite. They want the currencies to weaken. So there is going to be this interesting volatility that we'll see in the currency markets. So China has been the most efficient manufacturer in the world, and they have been the lowest cost manufacturer in the world. Disparity is still there between India, China, and US and Europe. The European companies are so much cheaper on valuations. China is still so much cheaper than India on valuations. So I think global investors will have to take a call on the growth versus valuation trade-off. There could be rallies because any good news, the markets are so oversold. Any good news happens on any front, we would see a rally. Will it sustain? I don't know.
It gives me immense pleasure to introduce to you all one of the most respected, highly educated, highly placed women in the financial world globally, in emerging markets, and in India. I have with me today Dr. Punita Kumar-Sinha, 30 years plus of experience in investments management, founder and partner of Pacific Paradigm Advisors from USA, and on long managing the largest India fund from US for almost 15 years at a stretch. Unparalleled achievement for any women to manage. And post that, she's been on some of the best companies' boards in India, guiding them through the corporate and financial strategies. The important boards include Infosys, Fairfax India Fund, Blackstone Embassy REIT, JSW Steel, Lupin, and the most important now being, I guess, the Tata Capital Board. And she's also been on the board of governance of CFA Institute. It is my extreme pleasure to invite her, not only as one of the most successful women, but also as my personal friend, who has stood by me throughout my journey. When I started as an institutional salesperson and I was visiting US, to today, when I am managing Prabhudas Liladhar, she has stood by me with her wisdom, with her strength, with her connectivity, all throughout this journey. She is now the chairperson of our PL Asset Management Company, guiding Siddharth and the entire team for some of the first in the quantitative asset management in India. And she's been able to do that because she's got a very solid grounding, being a PhD and a master's in finance from Wharton School, University of Pennsylvania, CFA charter holder, and above all, a chemical engineer with distinction from IIT Delhi. All these degrees, Punita, have always been the dream of anybody who is serious and sincere in education. And you are one who have achieved all. So we thought that you're the most rightly placed person with all knowledge to guide me, our investors, through this very, very volatile time in global investment, and particularly in India, after a long run when markets have corrected substantially. So sitting from there in US and watching both global markets, US markets, the internal noise within US and overseeing India, now coming to India, what do you think is this Trump tariff noise that you have heard till now is leading to? What are the key repercussions that you are seeing?
Thank you, Amita, for your very kind words coming from another very successful woman and now leading PL. So all the clients are very lucky to have Amisha as your chairperson of PL. And I'm so happy to be part of the family and great to work with you, Amisha, on this journey together. So your question on Trump tariffs. So over the last, whatever, 30, 40 years that I've been in the US, we've never seen a president like, we've had President Trump for his first 5 years, but he wasn't as dramatic and as in terms of transformational for good or bad as he is in this term. And we haven't seen a president like that who has basically unnerved global economies and markets. And what I would like to say is that, we have been we have moved from a rules-based global world order to a rulers-based global world order. So we have now rulers that are determining almost unilaterally what their economy and their country needs and acting in their own self-interest for their country without thinking about the global economy. And it is not just in the US. We are seeing strong men, strong leaders have emerged across many, many other countries, whether it is China, Russia, India, Turkey. So, this is a world of rulers, as I would like to say. And that means that there will be a lot more isolationism that might happen because countries are looking inwards and not outwards. And that also means that the whole geopolitical landscape will change because it's a multipolar world. The US used to be the savior of the world for many, many decades, but now they don't want to play that role anymore. They don't want to save the world. They are, let's come make America come first, which is why this whole tariff discussion has started. These tariffs are a way of saying, look, we have subsidized all of you in the global economy by importing your goods and not putting reciprocal tariffs. And you have now run trade surpluses while we are running a trade deficit. And so we need to balance that equation. That's where that was his election mandate. That's what he won on, and that's what he's implementing. Of course, it's very unnerving for not just the rest of the world, even for Americans. It is very unnerving. So I'll give you two or three fallouts from this tariff increases for Americans in America. So it's not all good for the US, right? Because it means we won't have access to cheap goods coming from China, from Canada, from Mexico, and from other countries. That means cost of goods for American industry and American consumers is also going up, which could be inflationary and also slow down growth. Now, the hope that I think what I'm hearing from, from certain people who are close to the President Trump establishment is that there is a hope that the slowing economy will have some positive benefit and that interest rates will get cut faster in the US because the deficit in the US is also quite high and it's a big debt burden that the US economy is carrying. So if economy slows, interest rates will come down, the government's deficit will reduce. But that's one positive that people are thinking about. But the negative is that it could be inflationary, it could be creating unfriendly relationships and global alliances that have been around for years and years are getting broken down. And each country is going to have to look at their own self-interest.
Correct. And so when the whole global equations of business are undergoing changes or are likely to undergo changes. And as what you said, one direct impact is that when China is such a large partner to US in terms of traded goods, a 20% straight duty is going to lead to some increase in costs. And if do you see in large category of goods, are there any other countries which will emerge to be beneficiary because China will become costlier? This is step one or question one. And question two, if China becomes costlier and their exports come down to US, where will they push their goods? What are the thoughts emerging on these two?
So first, let's take China. So China has been the most efficient manufacturer in the world, and they have been the lowest cost manufacturer in the world. A lot of companies and businesses have already, from during COVID, have started diversifying their supply chains out of China. So what China plus one strategy has been there in global businesses now since COVID. So, companies themselves have been diversifying, whether it's to Vietnam, which has been a big beneficiary, Southeast Asia is again emerging as a beneficiary, India to some extent was a beneficiary, Mexico was a big beneficiary. So, because of the NAFTA, a lot of companies began that was serving the American consumer market were big, setting up factories in Canada, but particularly in Mexico and Latin America. Unfortunately, with the tariffs having gone up on Mexico and Canada, it is going to hurt companies that were using Mexico as a low-cost manufacturer. So there's no place to hide in that sense. If you are a company, a business that was manufacturing in China and has started adding factories in Mexico, you're facing pretty much the same tariff. So you're not benefiting. Now, every country is going to have to establish its own trade policy with the US. So it'll be a lot of bilateral negotiations will have to go on. So whether, you know, so if India puts tariffs on US goods, US will impose reciprocal tariffs. If India reduces its tariffs on certain goods, then the US will also have lower tariffs. So that kind of dealing is going to go on country to country. And so it's hard to say right now which countries will be beneficiaries. India could also be a beneficiary, depending on what tariffs we impose. Now, I know that from what we are reading is that US wants to send defense equipment to India. And so India would maybe be forced to lower their tariffs. That could create competition for our defense industry. That could mean potentially some negatives for the companies that are in that sector if there's more competition and we are not competitive. So I think that could be sort of what the example I'm giving an example of what the India equation could look like. Now, if now India and China will have to set up their own trade policies.
Bilateral agreement.
Yeah, bilateral arrangements. I think so far, I mean, China has been doing a lot more, has started to export a lot more to Africa, to India, to Southeast Asia. So they've also been diversifying away from the US. And when I'm in the US or when I was in the US, earlier I used to find US to be the cheapest place in the world to shop. Now I find it very expensive. I find Europe cheaper. I find India cheaper. And the number of toys and the number of things you can get in India that are made in China are actually now almost as much as you could get in the US. So to your question, where will China export? I think there are many countries in the world that China could export to.
So one more question corollary to this question one and question two is that Trump wants that tariffs be imposed on any goods which are coming to US territory. In turn, his intention is to also that a lot of things be manufactured in US. And if so, what happens to 2 decades of all low down growth in manufacturing leading to environment issues, this, that? to be outsourced to emerging market? Is that completely changing? And also, do you see that these kind of industries in medium term of 3 to 5 years can emerge in US? The manufacturing will rebound?
So it's a great question. So I'll give you you mentioned I was on the board of JSW Steel for 10 plus years. And last time President Trump came to power, he started this whole thing on Make in America, and he put tariffs on steel. So companies like JSW Steel were one of the first few Indian companies to actually then go and acquire a plant in the US and manufacture in the US for the US customers to prevent those duties. I actually visited that plant, and it was such a great joy to see them having put the Indian flag on American soil along with the American flag. So it was really nice to see the Indian flag and a factory owned by an Indian company. And now companies like that, many companies would potentially go and buy, like this was an old steel plant that had been pretty much, shut down, really old equipment, much worse than the Indian steel plants that we see in India. So JSW Steel acquired it. They said, we will modernize it, we will improve it. So I think there are a lot of these assets that have been kind of run down that are potentially could be restarted, and foreign companies might go and either do greenfield, brownfield, or acquire these. And, so that's one. My worry is not that as much as the availability of labor. If the immigration policies in America are also as stringent as President Trump is making them to be, then how are we going to get labor? There will be a big labor shortages. Wages will go up in America. Again, inflationary costs for doing business is going to go up. So whoever sets up a plant in America is going to have pretty high costs compared to setting up a plant somewhere else. So all global companies will have to rethink their US strategy.
Also corollary to this itself, that there will be an intervening period of adjustment by which world realizes where we are heading in terms of this trade war which has started. While manufacturing to reshape in US itself will also take some time. Global trade will also decide which routes it wants to possibly bypass some of these things. But US goods becoming a little costlier is a given. Leading to inflation is a given. How would currency come helping mitigate this risk of inflation, you think, from dollar perspective and the dollar equation with some of the other leading currencies?
So every country wants to devalue their currencies to offset the tariff increases, to keep their goods competitive. And if everybody's trying to devalue their currencies, basically, even US dollar wants to get weaker in many ways because they want their goods to be competitive for exports. So obviously there is that fear that the currencies across the world will get devalued. And if so, then where should people invest? And that is part of the reason why you've seen gold prices go up or even Bitcoin go up. There is pressure on Europe to appreciate the euro to prevent tariffs. So countries have been getting pressured. Look, either you get tariffs or strengthen your currency. So, but countries want the opposite. They want the currencies to weaken. So there is going to be this interesting volatility that we'll see in the currency markets. I'm not a currency expert, so I don't know which way the currencies will go. But all I can say is there's pressure for the US dollar to weaken and the euro to strengthen. That's kind of the dynamic that the global markets are setting up.
So we in India, coming back to India, of course, I will touch upon India's economic growth, corporate growth. But first, I am touching the incessant selling by FIIs. We have lost a lot of money. Indian retail participation continued chugging along, giving way to a lot of this exits from FII. And one of the worries, of course, was India valuation, but Indian currency weakening and US dollar strengthening was also one more very important parameter which played behind this FI selling in current calendar year's numbers. But if US dollar has to weaken, Indian markets have already corrected. How do you see this fund flow changing for India?
So if you look year to date, calendar year to date, FIIs actually have still been sellers, right? And the domestic investors who were the big supporters of the Indian market have also reduced their inflows. And then if you look at the market performance of other markets, again, this morning, I was just checking how India was doing versus other markets and which markets were positive. There are many markets that are up this year. Many markets that are up. Europe, a lot of countries, stock markets are up. China is up. Korea is up. So India and US, those two markets, which were the best performing markets in the last few years, actually are kind of the worst performing markets this year. So there's been a rotation. The funds flows, global investors have rotated out of the higher valued, higher performing markets. And so India is not alone in that. US and India are kind of together in that down. So I think when valuations, the valuation disparity is still there between India, China, and US and Europe. The European companies are so much cheaper on valuations. China is still so much cheaper than India on valuations. So I think global investors will have to take a call on the growth versus valuation trade-off, because Indian companies do offer one of the best growth secular trends long term. But short term, we are seeing analysts revise their estimates down. In fact, over the last few days, I've seen a number of price targets being brought down by Indian analysts themselves. So the Indian analysts themselves are cutting their estimates and are cutting their price targets, lowering the upside. I'm not seeing, and those reports are going to foreign investors. They're not going to run in to buy these stocks even at lower valuations, because the upside itself is come down from what could be a 30-40% number to maybe a 10% number. And then is it worth the risk? Because we don't know which way the currency markets are going to go. We don't know what's going to be the new global world order. So there's a lot of global risk that is raising equity risk premium across the world. But I do think the India's growth story is, while it's slowed down, it's still a secular story. So at some point, there will be enough domestic. I mean, our domestic capital is locked in India, so they have no place to go. So at some point, the domestic capital will come back and start supporting and current valuations and reinvesting again. And so I think we may find a bottom at some point this year. I don't know when.
So this is not the bottom.
I think I'm a little worried this year because I think President Trump is a little bit unpredictable, and it could be, there could be rallies because any good news, the markets are so oversold. Any good news happens on any front, we would see a rally. Will it sustain? I don't know, because then there could be another announcement somewhere that would unnerve the global markets. And so markets could correct again. So I think we're going to see like a year which is going to be up and down, up and down. And so there will be a lot more volatility. And even if India is safe and secure and it's not volatile internally, the global noise and the correlation between equity markets worldwide would also means that the foreign investors would also kind of respond to those uncertainties. So it's going to be a challenging year for fund managers, for investors. You could still see an up year at the end of the year. I don't know, but it's going to be up and down. And it depends not on India as much as it depends on what's happening in the rest of the world.
True, true. But also, as you see, in India in past 6 months, from India doing very well to we started seeing around elections and center as well as multiple states, the government capex last year slowed down. So compared to their total budget kitty, they spent 12% lower. That had its own cascading impacts across industries. Then we saw that a sudden spike came in our inflation, consumer price, and it went up to 9.5, 10. We saw this FII taking away money and the liquidity became very tight. But having seen all this, what we now see is that RBI has injected a lot of funds. They did OMOs. Government in their new budget not only restored the capex budgets, but also gave a lot of dopes in hands of masses by way of tax rebate. And inflation has also softened completely. Do you think that India growth can revive? Is there ground enough for India growth to revive?
As I said, India is a secular story. Our consumption is our biggest strength. And that our demographics actually will deliver that consumption. And that demographic is very much in place. It's sound. We still have a very young population and a very aspirational workforce. And so they will keep our consumption strong. So anything that is India domestically based and not so much export led, I think those places you would see the growth come back sooner than anything that's export led, unless the bilateral trade negotiations on those sectors go well. So yes, I mean, India's economy is always ranged between like 5, maybe 4 on the lowest that we've seen several years ago to 8%. We are getting to that point of below 6. We will rebound. There is cyclicality in the economy. So I think it will rebound. Interest rates will probably come down. So there is a push. The government is making a push to grow. Consumption will pick up, I think, over time as interest rates come down. Right now, I think people are also tight because the wealth effect, having seen the stock market fall, everybody starts feeling poorer. And so they hold back on their spending. Maybe once that stabilizes, they'll start loosening their purse and spending.
Do you also see being at some time on some of the largest IT companies' boards that this AI and also this low-cost coding and speed coding? You see, last 2 years, their hiring by largest IT companies have substantially come down. That itself has its impact on buying of property and spending and car and so on. But that time, AI had not penetrated as much as we are likely to see it now happening. So do you think that will, in the intervening period, will be a force to reckon in terms of urban job growth and in turn urban demand?
You know, the IT sector has gone through, IT is always an evolving, dynamic sector. Over the last 30 years, 40 years, there has been so much disruption that has come, and the Indian companies have adapted. There was no internet when these IT companies were formed. That's come, there's, there used to be a whole call center world that is reduced. So there's been a lot of disruption that they've been able to cope with and innovating. So I think Indian IT companies will also have to move up the value chain. All the low-end jobs that they were doing, which were probably not paying or giving them that great margins to begin with, are probably going to be replaced by AI. They'll have to move up the value chain. And I think they're all trying to innovate to get there. And the question really is, how much is AI going to I mean, it's not just AI isn't going to just impact the technology sector, it's going to impact our financial sector too. We are also seeing
Absolutely.
jobs in this segment will also, get replaced by AI. So for instance, call centers of financial banks and other firms have already shrunk in size. So you have to keep innovating.
Mm. And now, what is the view on China economy after, as any which way global investors had started shifting to China sometime beginning last year, finding it to be so cheap that you can't go wrong. From there to the recent launch of DeepSeek and claiming their position in the technology-led, innovation-led economy, to now thinking to loosen up their economy and pump in some more liquidity, support economy. How do you think that China is shaping up both in terms of economic growth, and how would investors continue to like it because of the valuations?
Yeah, I think investors still are quite optimistic on China. Valuations are still low despite the recent rally. The worry really is, can President Xi Jinping, can you trust him to continue this opening up, or can he tighten again like he did in a few years ago and go back into his little bit more of a communism, socialistic kind of mode? So, but there's no doubt that you can't ignore China. It is the most competitive manufacturer in the world. They also have a large population. They don't have the demographic dividend that we have in India. So their consumption growth story is not as strong as ours. They do have excess capacity right now because for all these years, there has been some slowdown there. So in certain sectors, they have excess capacity, but they are innovating rapidly. And I think China will manage the tariffs situation by innovating and finding alternative countries. They've already started penetrating Africa, Southeast Asia. They may take over Taiwan. There's always that risk. So that would create shocks in the whole semiconductor sector. They're not going to be sidelined. They're not going to lose necessarily by the tariffs. They will recover. And I think the China story, the equity market story, to me, still looks like it has upside.
So, as a global fund manager, would you have allocated more to India or more to China this year?
To China,
You would have
because
been
of the
overweight.
valuations. There is an equity risk premium in China. There was very little, like at those valuations, there was not, almost all the risk was priced in.
And even currently, you continue to hold the same view.
I mean, the markets have rebounded, stocks have rebounded. There is a little bit of worry, obviously, with the tariffs and the uncertainty, but if you look at some of these companies where their stock prices were years ago to where they are now, many of them are still trading below their highs. And India was at its high. So when you have that disparity, you will start gravitating to countries where the valuations are better. But I would say that even Indian market will find its support at some point this year. I don't know whether this is the support, or I think there could be more downside because I don't think the worst is, I don't think the Trump news flow and all his negative news flow is over yet.
As you see, from Nifty perspective, India is already at a slight discount to 10-year average. But if you see mid cap and small cap, where the correction has been higher, it is still not at a discount to its averages. And the whole euphoria was on the small cap, micro cap, SME, and so on. So, what's your view on which segment of the market, if at all, should be looked at? How should one look at their own portfolios when they have allocated to small caps, mid caps, which till yesterday were doing so well, and there was a complete FOMO? So people were adding to their portfolios. How should they view their portfolios now? What action should they broadly take?
So, mid caps and small caps have these phases when they go up a lot. It happened in 99. in a bull market, they outperform 98, 99, then it happened again in, 2007, 2006 phase, they really outperformed like crazy. I remember the mid-cap index or something in my fund, our mid-cap portion was up 42% in December 2007, just in 1 month. So, and then when they crashed, they also crashed. Yeah. So, but when they fall also hardest because they are driven by liquidity as well. They are not as liquid. So you're very dependent on a large seller coming and selling or a large buyer coming and buying. So you can't control the movement of the stocks. And so often some funds, if they get a redemption, they then have to sell their large caps. So while I think large caps are more attractively valued in mid and small caps even today, if there's a liquidity crunch, then the large caps will also fall and may fall more, only simply because they're the only place people can sell and get liquidity. And so that's always, they're linked. I think the growth story of India is through actually the mid and small cap companies, not just the large cap companies. The large cap companies will grow in line with GDP, nominal GDP plus minus some, factor. So we see maybe 15%, 20% growth. Mostly, you don't see more than that typically in a large cap company. The higher growth always comes in the emerging sectors, in the new companies, and those tend to be in mid and small cap. And so I think the growth will be in the mid and small caps. You just have to be extremely patient. And when they go up a lot, you should take the profit. Don't try to try to capture every last bit. Yeah. But I think that if you are a long-term investor, you can still just hold on and at some point they'll come back.
True. So, before I go to which sectors that you like, we keep hearing this year from different segments of market that metals will do very well. This is the year of metal, or this is the year of commodities, not metals. And metal being one of the very important part of it. Do you find any fundamental connection in this thought which has been going around?
Actually, commodities is a very tricky sector because it's not driven by domestic demand only.
Correct.
It is very
Yeah,
dependent
it's
on
global.
global. And that is a sector that will face a lot of volatility, in my view, from the tariffs. If President Trump has put tariffs on Canada, where you import most of your metals in the US from, and it's a commodity-oriented economy, what does that mean? I don't know still. I haven't been able to figure that out yet. It's just so recent. So I don't know if commodities are the best place to be, frankly. Precious metals, maybe yes, simply because of the currency uncertainties. But the rest of the metals, I don't know. Now, I know that companies in India, the metal companies, commodity companies, are now no longer necessarily looking for export as a market. They are focusing on the demand in India for infrastructure, consumption, autos. And so they are at least they were finding domestic prices were better than their export prices. So they were looking to sell more in India. But globally, I mean, I don't know whether commodities is the best place or not. I think it'll be volatile.
Correct. So coming back, what do you think are those emerging sectors, or they are still defensive sectors? What would you prioritize in a portfolio when it comes to India?
So I'm going to refer to Siddharth's fund, right? Siddharth's quant fund, I think, is very good at figuring out which sectors and styles are in favor. And what his models are showing and what my other models are showing and what I'm seeing in the economy is that right now is the time to be in quality companies, defensive, maybe not your highest growth companies, but your steady growth companies, companies that are dependent on India's consumption, India's secular growth, and not so much on foreign demand. So that could include companies that, like, example could be, I'm just throwing out this example, I haven't analyzed the companies like diagnostics, hospitals, diagnostics. Those are generally safe sectors that are not dependent on what happens in the world. It's like a health issue in India that'll impact it. And we have very low penetrations there. So those companies will continue to be defensive. Consumer companies, I think banks, financial sector has been quite beaten down. And there's been so much negative news flow with the RBI tightening norms, with liquidity easing. I think that's a sector that could benefit. So I think those are sort of anything that is global. I would say be more watchful. You may get better prices. Whether it's IT or whether it's pharma, but that is dependent on global markets. That we don't know what will happen to tariffs on drugs, but the other Indian healthcare oriented, Indian consumption, Indian financials, maybe even Indian autos at some point will see benefit. I think travel is a sector, while the economy is slowing, that there is some slowdown, but the numbers are so low that you will continue to have growth. I think fintech innovation will keep happening. So, food delivery, that's going to keep happening. People are not going to stop eating. So there are those segments that I think will still keep growing.
I would like to now open the session for questions to you. And you all are requested to please write your questions in the chat and I will read it out to Punita. So she did say how trade war will be affecting the software industry.
So I think not so much the trade war, it's the immigration policies that affect our software industry, because we are exporters of people and services in India, the software industry in India. We're not exporting like IP and products and chips and semiconductors or anything manufactured yet. So it's more immigration policies, which have always been a bit negative. Even when President Trump came, he forced Indian IT companies to have at least 50% of its workforce without visas, which means Americans, which were that they had to hire. So their costs went up, and so there was a period of 1 or 2 years of adjustment, and then they've recovered. I doubt he'll put any tariffs on services, but I can't read his mind. But yes, the
No, I
companies.
think the indirect, yeah, sure. But indirect link that people are putting is that due to this tariffs, inflation, if US slows down and US companies go into indecisive mode, the order finalization, order pipeline will have its own impact.
Yeah, you're right. Indirect impact, second, third degree order impact. Yeah, but that would not be just for IT, but that would be for a lot of companies, because companies will cut back spending.
Yeah.
Yeah, they will cut back if the US economy slows.
Mm.
And I
Will
don't know
USA
what that means for offshoring. I have no idea. That is an open debate still. Like, will offshoring be more as a result, outsourcing to India, or will it become less? That we don't know yet. It could also mean that people say, okay, to save money, I'm going to outsource more to India.
Okay, during latest visit to Mumbai, Mr. Howard Marks mentioned about relatively higher interest rate regime. What do we see as effect on Indian companies over a couple of years?
For higher interest rate regime. I think at the moment, to me, it looks like we may be going into a lower interest rate regime because of slower growth. But higher interest rates will happen maybe if inflation really gets sticky. Yeah, then we'll have stagflation. And that would be negative for everybody, including
Across.
Indian companies' cost of capital. Right now, Indian companies actually can borrow cheaper in India than overseas, because our interest rates are actually not that high compared to US, for instance.
Okay, this is there. Which sectors would affect and how if reciprocal tariffs are implemented? into bracket EV? Do you have any specific views on this reciprocal tariff in particular?
Well, I think EV, because of the proximity to Elon Musk, they're pushing to get Teslas into India, right? So EVs, they're trying to get India to lower tariffs on EVs. India doesn't have a huge EV market to begin with. So I think JSW has gotten into EV cars, right? So I was reading Sajjan Jindal's comments, and he said that Tesla will not succeed in India. But I think that's sort of what we can expect is more Teslas in India. But we don't have the charging infrastructure. So all that will take time. So if Tesla were to come in India, then they'll also could mean more capex for charging infrastructure to be put across India. That can also have positive on the certain sectors that will be involved in creating that infrastructure.
Airtel Elon Musk SpaceX tie-up. What will be the benefit to Indian retail investors?
I don't know the answer to that.
Okay. Bharti Airtel and Starlink likely to come together. What are your views?
I actually
Yes,
haven't analyzed it. It's too recent.
correct.
Do you have any? Has PL analyzed it? I don't know.
No, but particularly for Starlink, they say it's not as much for masses, but those who care for very uninterrupted and quality connectivity, they would shift. So high-paying consumers would like this bandwidth more as compared to
But it'll
others,
also
and
be
that's
more
what US
costly.
markets are showing too.
But it'll be more costly then.
It will be very costly. Those who
Yeah.
can afford would like it.
Yeah, I think
As
corporate
they
sector might shift, but then they're also very careful. In a slowing economy where you want to control costs, you may not switch immediately.
correct. What do you think about the pharma sector as there will be tariffs from US and we are one of the largest exporters?
Yeah, so the tariffs haven't come yet. But if they do come, then of course our Indian companies that are into generics and are exporting to US the generics medicines will be impacted negatively. But
you
of
know,
course,
India generics has 35% market share in US generic.
yeah, so that's what I'm saying. They will be impacted if the tariffs come. But the US is already facing a huge amount of medicine shortage.
Shortages.
Huge. I
Correct.
personally faced it. I can't get certain medications. I have to take them in India. And so if you put these tariffs and it becomes uncompetitive for Indian companies, they will also start manufacturing in the US. I think they are looking to maybe start shifting some manufacturing there. Some of this disruption happened during COVID as well, because the cost, the tariffs, it wasn't the tariff that went up, but the logistics costs of shipping our medicines to the US, any goods from India that were going to the US from China, there was such a big supply chain shock because of the costs of freight, air freight, and other freight shipping rates went up. So the tariffs is not isn't similarly a tax or like a freight increase that had happened during COVID. Our companies came out of that. They adjusted. And now they will have to adjust. They may manufacture more in the US. They may, negotiate with their end suppliers to raise prices. If their prices go up to send to US because after tariffs, then ultimately consumer's going to pay for it.
So true. Do you see Indian INR going up to 90 vis-a-vis US dollars?
I'm not a currency expert. And again, I don't know. There's so much pressure on the US, all currencies to weaken. All currencies would like to weaken to offset the tariffs. So could it go to 90? Yes. Could it appreciate long term or in the medium term? Because if US dollar also weakens versus other countries, then maybe it'll weaken against Indian rupee also. But short term, could it weaken? Yeah, I suppose. Indian rupee could weaken.
So the current, my God, look at the amount of questions, huh? Where is the German one? I just wanted to, I don't know how to stop. German model. Hundreds of billions spent on green energy, electricity 2-3 times more expensive, producing 20% less energy today than 15 years ago. What is the link? So what is the exact question?
I think I saw some questions on renewables. Because
Yeah,
I think
something they were
President Trump
confused.
is basically said put on low priority all of this ESG, DEI, diversity, ESG initiatives, renewables. But Europe has not slowed down. Europe is still very strongly committed to a cleaner world, clean tech, clean energy, renewables, ESG, diversity, all of those things. So I think it's here to stay. This renewables are here to stay. I mean, India needs more renewables.
Once again, maybe a slight repeat of a question which I asked, that reducing dollar index, improving Indian macros, lower US bond yields, and corrected valuation. Do you think FI selling will stop?
FII selling will stop at some point. Yes, of course, it always stops at some point. At a certain valuation, it will stop. If the domestic investors start investing in the market, start going up, FIIs will come back in.
Come back again.
And I think the valuations, as you said, it's at 10-year average is slightly lower on the large caps at least. I think they will start. Some money will come back into India. Some bottom fishing will happen. Unless, these funds themselves face redemptions. But at the moment, as I said, US and India have been kind of the best performing in the last few years. They're the worst performing almost now. And all the action is in all the beaten down or relative underperformers.
How does the management of US debt influence global financial stability? Any views you have?
I mean, as I mentioned, US debt has ballooned to unsustainable levels, which is why a lot of federal jobs are being cut. When I was at Blackstone, our chairman, Pete Peterson, had written a book called Running on Empty. That was almost 2 decades ago. And running on empty means US is running on basically no reserves of its own. It's basically living on borrowed money, and you're kicking the can down the road. So you have to deal with that problem now. The US debt, the burgeoning of US debt over these years is definitely causing financial instability today because it's being dealt with by cutting federal jobs, by raising tariffs, by trying to boost, reduce imports and reduce sort of trade deficits. And that is causing instability, and it is causing geopolitical and not just financial instability. It's going to cause maybe some geopolitical instability too.
So we got all in all a very good insight in your one opening statement that from a rule-based world to a ruler-based world is the transition that is happening. And because it's going to be ruler-based, there is going to be a lot of mood swings and lots of volatility to follow. And each one will be busy protecting their own turf. So the clear roadmap will find its own time to emerge. Having said that, you still show confidence both because of the size of the economy and the valuation of the economy for current year, in particular on China. And you think that the Indian economy, our Indian markets will continue to be volatile despite being a very secular market because of its demographic. You feel that select mid-caps, good quality, even if right now are underperforming, in long term will bounce back because they typically pose higher growth and one should continue to hold on to them. Lastly, you thought that quality defensive sectors where earnings are not too cyclical is what one should continue to have in their portfolios, starting from healthcare, that is hospitals, diagnostics, travel. Maybe I can add hotels if you agree.
Yeah.
Yeah, maybe insurance in some form,
Yes,
some of the more
yes.
steadier
Financial that I
businesses,
mentioned.
financials, of course, it should form part of the portfolio. And
And
one
large
may
caps are
not
more
expect
defensive than small caps.
large cap.
So you
Correct. Large
definitely
caps
want to
are
have
more
a tilt
defensive than
towards large
small
caps
caps.
over small and mid caps. And if I could, just add that there could be rallies, short-term rallies, but will they sustain? I
Correct.
don't know.
Correct. Correct. So I think this brings us closer to the end of our session, which was very, very elaborate. It brought us understanding across the board. And this was one of the most participative sessions because questions are still not stopping and people are so eager to know more from you. So we would end with a request that please give us more time to hold such sessions more frequently with you.
Sure, absolutely. Absolutely.